Alright, so it's getting towards the near the close of all the markets in the U.S. I'm just drawing out the development that happened, you know, through Sunday night into Monday morning and afternoon. There was a bull flag here. I mean a bear flag, sorry. Very small, very small. But it was enough to challenge support here. If you look on a longer term chart, which is always good, you should do that. Start looking and seeing that the support, there's a huge gap here, this area, and it actually breaks down into those levels and sort of recapitulates. Recapitulation can be seen here too. What I did was, during the move down, I guess I practiced the measured move tactic. You can see like the recapitulation here. When you look on a longer time frame, that recapitulation is just a tail. Yeah. So that offers you a decent entry if you know what the measured move is. Because it's kind of hard in this case because of all the action going on, but anywhere here, I guess this is actually a safe buy zone if you plan that out. You would be okay. The mistake I made was assuming that this would be a support that would go unchallenged, but if you look at other indexes like the SPY or something, those supports were still being challenged and they were correlated to the macro. So what I did is I ended up taking positions lower to average out at a lower price. I actually got out around this level when crude started closing. I did not want to wait the extra hour for this retracement here. But it looks like almost like if you do a measured move like this, the measured move might retrace back to 50% most of the time. So it's something good to keep in mind. Over here, I had stops like in this area, so I was close to getting stopped out actually, but my position was small enough where those stops didn't come into play. But yeah, overall, if I had stayed, I would have made a few more hundred, but it's okay. I'm just managing my risk. Don't usually trade after the pit close because it's just slow as molasses volume, anyways. One thing to notice is that crude actually decoupled from everything. The range is huge on here. I mean, look at the structure. It looks so messed up. There's so many gaps here. If I look on an hourly basis, yeah, I'm just looking at how this might play out later on. Yeah, I don't see a argument for or against bullish, but it looks like it's just preparation for the later on in the week. Even VIX is going down. That's what ES is doing. Yeah, ES is well behaved. Canadian dollar actually didn't budge after a while. It's still just caught there. So crude really did its own thing today. I want to see how natural gas recovered. Natural gas actually is still in that gap. So that's really interesting. How about copper? Yeah, all the commodities seem to be down. Gold. Okay, yeah. The one sign about gold though, yeah, the whole issue with it being popping on Friday might have been an indicator of a safety. When gold goes up like that, with sometimes you have to watch out. But overall, I mean, hey, what can you say? It's a learning experience. If I were to trade this market again, I would wait later on a Monday and watch the macro environment. This was brutal. I don't think this part was actually properly repaired, especially with the squeeze. But I can see how a bunch of traders who might have been caught long, especially around this area, would have dropped. You can tell how fast the drop is by people getting out. People are getting out here too. So yeah, you can see the capitulation here. But yeah, measure moves are pretty useful if you have it set right. And then using that to form the retracement also is pretty useful. But yeah, that's about it for my analysis here. I think tomorrow I will probably wait and check the market environment before I make one of these macro trades.